and to fund the tax cuts that they are putting in place, this 45% tax rate contributes about 2 billion. Now, of a total nearly 100 billion worth of spending, 2 billion is pretty insignificant. So politically important, economically reasonably irrelevant. That's the way to try and think about it. In terms of action that we got on the day then, this is what you got in the bund. I was talking to one of the guys today earlier around about midday and saying, this was a really tough one. Like I talked about this morning, we moved higher, we balanced higher, you've got the scope for a further move. I think this was reasonably obvious to be looking for. The problem that you got with this was that early on in the day, we trade above the IB, we trade below the IB, and as I talked about a couple of times last week, this has got all the hallmarks of a balanced day. And so you then lean towards the idea that actually this isn't going to be the breakout today, we're not going to see the move higher, and that we're probably going to balance it out today, giving tomorrow the opportunity to go. It's one of these where you kind of look at it and you think, please don't rally right now, don't explode to the upside now, because you would prefer the opportunity where it feels more clean the next day. Doesn't happen. We do get the move towards the upside, and the break comes just before the US session. That gives us the charge, this sort of explosive move out of what becomes, I guess you could call it, from a 15-minute or an hourly chart, a kind of wedge. You could look at it like that as a technical break, but the way it had currently traded and where it had started to build value didn't really line up with this. Once, however, it does break 139.24, that is now your opportunity to the upside, and that does give you the chance to try and play this. The benefit does come from the ISM data, which sort of really kicks the move on a little bit. So you are getting the opportunity, but it's not such an easy one to actually play, simply because your perspective on the day has been set up by the way it started to trade early on, which is indicated more likely a balancing type day. A similar story in the pound when we get to that in a moment. When it comes to the S&P, what we've got, and I think there is coming similarities here with what we saw on Thursday. Large initial balance, straight to the upside today rather than downside that we got on Thursday. The problem that you have is the size of the initial balance. This is around about 60 big ticks. And for that reason, this does limit the scope of further movement to the upside. Not only that, the S&P is still trading well within the range of last week. So really to believe in too much to the upside, you want to be up above this sort of 37.08 area to really be thinking as much more. That said, we have broken trend, which gives us some distinct movement towards the downside, or opportunity towards the downside. So trend's gone. There is a chance to go down now. I'm sorry, to go up now. But what we've now got to do is get through the weekly range, through weekly value. We're doing a good job of it in the sense that as long as you're above 36.24, this is a market that is reasonably bullish, and it looks like it has left this action to the downside, and that may well be it. So, question now is, for the rest of today, do we just simply maintain value higher, create a kind of normal distribution day, arguably perhaps pushing a little bit higher? I think to get to Thursday's high wouldn't be out of the question. If we can get up towards 37.08, that's going to be a pretty decent move, you would feel, now for the rest of the day. Once that's done, that gets us solidly back inside last week's value, towards the top of it, and does then open up the opportunity for that larger move to the upside. So it's that question now of judging which one that is going to be. I'll actually be showing you an S&P trade on top trades in a bit. We'll just look at scalping and how to deal with the position you have when scalping. Gold then. Gold, I felt, of all of them, on the back of the moves that we saw last week, had the scope to the upside in a nice way. Clear break of this sort of downward sloping wedge that you got formed breaks the upside back inside this range over here, and that gives us the chance for the sweep towards the downside. As I said this morning, as long as you're above 1662, you're looking towards 1688, we get the sweep up, you get this strong move higher, predominantly on the back of the ISM data again. But look what it's done. Value's been left down here. This isn't ideal. Now, it doesn't mean that this can't be rectified, and gold does seem to be going some way to doing so. So you've still got the rest of the session for gold to now, as it is starting to do, fill this area out and turn this into a double distribution day. But the lack of ability to do that is going to be a problem, if that is the case. This can resolve itself in one of two ways then. Either we start to drop back today, you get below into the single prints, below these highs, and you get the elastic band move that takes you all the way back today. Alternatively, we still leave value lower, and tomorrow you get the drag back down the range. What we need for gold to go any higher than here is, yes, technically for it to stay above 1688 to 1700 basically. Stay above there, that's great. But what it also needs is to shift value up. So I'd be looking for tomorrow, if we haven't shifted value, a more balanced day if this is to go higher. Alternatively, drag back down to value tomorrow. So just be aware that whilst the move has been good, it's a hefty move, the absence of value shift is what's perhaps going to limit any further movement. Bring it onto a 5-minute chart, you can see there's the ISM data. That's what really kicks the move on. Prior to that, gold was looking reasonably balanced. You know, not a great deal going on. Reasonably simplistic balancing day. Given the opportunity to go tomorrow, the ISM data takes it higher, but there you go, you can see where the value has all been accumulated, and the ISM can't then maintain that, or sorry, it's maintained the move on the day, it's not created the shift in value yet. That could yet still happen. Right, final thing to go and have a look at. Cable, same story. Looked good for the move up. You know, when I was speaking this morning, we were on this move. And this was coming in on the back of, you know, the wind back of the UK rate or tax rate. Didn't manage to hold on to those single prints, does roll all the way back down. Notably, 2 secondary highs, we hold those down at 1188 area. Hold basically where there was a smaller set of single prints, 1170 to 1180, that holds, and then we get the move up. Not an easy one to trade at all, because even if you're buying this on the pullback, it takes hours to go. You know, the pullback comes before 8 o'clock, and the whole move takes until the end of the day to actually get going. So whilst, yeah, technically it looks nice, easy trade, yeah, technically buy it, it all makes sense. Practical terms, very, very difficult to do, very stuttered move towards the upside, not really the trade that you're looking for, not an ideal situation, unfortunately. Right, final thing we're going to have a look at, a little bit on scalping, and this was something that I was doing with the guys in the course today. How do you deal with the position that you have when it is not exactly going to plan? So, the idea here then, what you'll see is a few different things. First up, around 70, large amount of absorption that goes on around here. And you'll see that again, there you go, trades 500. And that's all happening in this little zone here. Now, what we have just seen is we traded down to around about 67.5. So if you're looking at this, buying or selling at 70 is easy to do. It's hard to define which direction we're going to go. So more what I'm looking for is where around 70 do I need to be sort of looking for a change of direction. We've just seen it trade 71.5. So these are now becoming my reference points. So I'm interested in 71.5 and 67 approximately. Anything around 70, not that interested in. because anything around 70 is not really giving me anything. All it's showing me is that there are people willing to buy and there are people willing to sell. I don't want to know that. I want to know which direction we're going to go in. As such, seeing as we have been down towards 67 and we have been up towards 71.5, they're essentially the levels that I'm interested in to see what the action is like when you get there. Now, if you put a bid or an offer, you're going to find that out a little bit easier, or be able to read it a bit easier. With what's happened so far today, you'd be much more inclined to place bids than you would to place an offer, because this could well be the absorption before then the next leg higher. You know, this move up, accept value at 70, and then a little flag and continue onwards. So of your choices, you're probably going to be more inclined towards 67, and that becomes the point you want to buy. Now, importantly, if you're buying 67, this needs to get back up above 70, and it drops. This is where, when you're scalping, you're in a little bit of trouble. What do you do with this now? Because naturally, whenever you're looking at a scalp, typically the stop is less technically defined and more defined by what actually happens. So what you've now seen is the market's dropped against you and it's dropped down towards 65. So that's now essentially illustrating to you where your stop needs to be. And what you now have to think about is, what are the scenarios? What could potentially come of this trade, so I can decide what I should do with it? You've bought 67 on the assumption that we are going to range here and then break towards the upside. Now, that's not happened. So we're down at 65. So we're now actually trading down in this range. What could happen from here? Well, one, we could drop below 65. You're looking at 64 and you're thinking trade down there and I'm out of this trade. What could also happen is it could trade 65 to 67 and then something more could come of it. The more resistance you get at 67, the more you start to feel that actually this is going to roll to the downside, in which case you may well ultimately have to take a scratch on the trade. What we're really after here is that we get above 67 and start to accelerate higher. And so with that in mind, you're going to get above 67, up to 70, up through 71, and that's the move you're after. So staying in the trade is still valid. What you don't want to be doing is just going, oh, well, it's gone offside a bit, I'm not sure I'm keen on this. And one way that you could deal with that is perhaps to actually use the 65 area as an area of support, try and buy it down here, so that you effectively move your average price down and you can scalp this position upwards. And that would be the way I'd be thinking about that. I know people say, well, but that's not the way it orders it, you know, it's one in, one out. Look, it doesn't really matter as long as you know that you're buying 65 and a quarter and trying to get those out of 67. What it is exactly, whether that is scratching your 67 and now being long 65 and a quarter, has the same net result at the end of it. So don't worry about the order in a sense, but what you're trying to do is you're trying to improve your situation here, because the market isn't gravitating above 67. So if you do have to scratch this, at least you may well have made, you know, if you scratch, then you've made a little bit of money on the 65s. That's the way to try and approach this one. So the point being that when you're scalping, it's hard to define a stop absolutely. And if you try and look at it from a number of ticks perspective or a tight stop, you end up in a situation where you could get pushed out of a trade without really being wrong down here. But you have to always think of it in scenarios. What's going to happen from here in terms of what's going to get you out if we go below 65? What are you really looking for on this trade, and how do you expect that to play out? Ideally, you want it back above 67 and to get back into this range. Once it's done that, now you can believe in the move up, and that's what you get here. So that's the way you have to think about it. Always think about it in terms of scenarios coming next. What's the next stage to this? What's the next thing that can happen? That allows you to decide what you're actually going to do, rather than just going, oh no, I'm offside, better get out of it because it's a scalp. You know, scalps are not trades that have to go straight on side. They're just simply trades where you're picking up information, you're dealing with the most immediate information at that point in time. Right, I'll wrap it up there for you guys. Have a very good rest of your day. For those of you on weekly coaching, I will see you all in a bit. Otherwise, I'll see you all on Wednesday morning. Catch you then.